How's it going, everyone? It's Sam. I need to talk to you about how the next crypto crash is going to happen. Now, right off the bat, I want to say I am not trying to spread fear, uncertainty, and doubt. I think we are in the middle of a bull run. I think we're going to do really well. But I had to phrase it this way because I know if I just say, hey, watch out for this, no one will watch. And this might be one of the most valuable videos that people see, maybe on YouTube ever. I truly believe that. And if not, I think it'll be really valuable to a lot of investors. Now, this doesn't matter if you were looking at cryptocurrencies or stocks, but recently we had a very good example of this in crypto, and we need to talk about the stupid things that people do real quick, because this, again, I think this is going to be really important. Now, if you guys don't mind just hitting the like button, I really appreciate that. Also, there is a link down there to BlockFi in case you want interest rate on your cryptocurrencies. They're also paying a bonus. And there's a link down there to Voyager, so definitely sign up for both of those. Get multiple exchanges that you can trade on. And there's a link down there to Webull to be able to trade in the stock market too. Now, I do apologize. I'm not sure why my screen is so delayed, but we're going to work through that. You're not here to watch my face anyways. But what we had to talk about is the fact that there is massive manipulation in the crypto market and in the stock market. Now, I realize some people have already seen this, but we really have to talk about what can happen, what will happen again, and what's bound to happen if you don't take the right precautions. And we're going to talk about what you need to do to really beat this kind of behavior. So if you haven't seen this already, I'm sure you have, unless you haven't just checked Twitter or YouTube in the last couple days. Basically, there was this massive crypto sell-off. A lot of people know that. And there's this post. Now, we don't know if this is actually real or not, whether it was anonymous, but basically there's a post saying there's an insider here from a major institution. Basically, there's going to be an announcement from China that will crash the market, the crypto market, and it's going to be a coordinated sell-off to drop the prices below a low threshold and liquidate one certain stakeholder. Now, they talk about this, but basically a bunch of stop losses were hit. A lot of people were margin called. So we had a lot of people that had to liquidate positions. In that time, these people that were really wealthy that caused this to happen, they bought up the dip. They bought the dip. This worked out almost to a T, where there was a lot of FUD, a lot of fear, uncertainty, and doubt in the crypto market, all at the same time. It happened to be the night before, so people knew that the crypto market was falling. And then the next morning, right at 9:30 Eastern time, so right about when the stock market opens, the crypto market fell. So right as people were looking at their phones, getting ready for the day, the crypto market fell. It sent off a bunch of liquidations. Exchanges crashed, so a lot of people couldn't even buy the dip. Some people couldn't even see what crypto was at because certain websites fell down too, like CoinMarketCap. And at the same time, whales were able to go in there and buy the dip. A lot of people were trading on leverage and got liquidated. They had millions that they lost. I heard about one person losing 4.5 million. Now, because of this, we had a lot of people that were selling at losses, right? Look at this loss that people sold at here. It's amazing. It's just awful. Now, at the same time, a lot of this happens because of fear, uncertainty, and doubt, right? There were major publications that were spreading rumors or spreading fear, and they'll say whatever they need to say. They'll say that the crypto market is too young. They'll say that it's inconsistent, that this just shows that there's no use for it. We can't hold on to cryptocurrencies. They're not worth anything, or they're too volatile. We can see this post here from Lark Davis saying people said the same thing about Amazon, right? It fell 95% here. We could see that over a couple years, right? This is not like a 1 or 2 week chart. This is over years. It fell 95%. Then it went up. It still didn't get to its old peak, and then it fell another 57%. And then it went back up, and this is on a logarithmic scale too, or it grows exponentially, right? From here to here is only 10, and then from here to here is 50. So you have to realize these dips are really big dips, actually. So then it fell another 65%, fell another 33, then 30, then 34, then 37. What we can see is it keeps on going up. There are dips in between, but it keeps falling, or it keeps on crashing upwards, as they say. Now, this is just amazing, right? There's all this FUD out there. Now, what can we do, right? When institutions are stacked against us, we have this happen in the stock market too, right? I recently bought into a stock right before this kind of short selling happened to it. So I bought into the stock back in January, right when the stock market was taking off. I bought into it right around here, maybe here. It went up a good amount, then it fell. Then it went up, then it fell, then it fell, then it fell. And it just kept on falling. There was just a sell-off in the growth market. Then this company got shorted. It got a short seller talking about it. And it pushed on the price day after day after day. And then all of a sudden, we have this article come out saying that an analyst says that it's undervalued by over 300%. And what does it do? Within a few days, it goes up 86%. It is the exact same company that it was a few days ago. It's going up 15 to 25% a day right now. And this is not exclusive to this stock. It's happened with many other companies. It's happened with crypto multiple times, where large money is able to influence people and able to take advantage of people, right? So it's not exclusive in any single market. When there is money to be made, people will screw with you. They will take your money away from you any means possible. And they realize how valuable the asset is. And they are willing to help spread the fear, so that way they know what's actually happening and you are fearful, or those are fearful, and then they sell at a discount and they are able to pick it up quick. And then as soon as it starts going back up in price, oh sure, now everyone wants to buy it again because it's not going anywhere. So people are willing to do that. Now, what can you do to combat this? Now, if you're watching this video thinking, okay, I know all this stuff, I know exactly what to do, maybe share it with someone. Maybe someone you know doesn't know this. And I think it's going to be important. So 3 steps here, and actually we'll throw in a 4th step. Know what you're buying. Gosh, people, if you are just buying stuff without researching, I've had many people reach out to me and say, hey, I bought this stock because you bought it. I didn't really know what I was doing. Should I sell it? I'm like, oh my gosh, you have to know what you're buying, right? Otherwise, you have no confidence when it falls. So that's where the hard work actually comes in. You have to research it. You have to put in your time. Even if it's just you watching 30 YouTube videos from all different people trying to learn about it, that's probably not as good as you doing the research yourself. Maybe it's better. Maybe they know way more than you do. Follow people that are knowledgeable. That's where I think, first of all, Twitter is really important. If you were watching Twitter and you realize what was happening, there are a lot of people that were posting really good content on what was happening, explaining exactly what was happening, that whales were trying to create sell-offs and panic. There are a lot of people doing this. If you follow enough, you can kind of get an understanding. Also follow people on YouTube, right? There are major cryptocurrency or stock channels that explain exactly what's happening. Definitely pay attention to those. So that's the first thing. Know what you're buying, pay attention, try to educate yourself. Second here, you have to, if I can highlight it here, know your risk tolerance and timeline. If you are not a risky investor and you can't see your investments go down 30, 40%, just don't buy risky stuff, because then you're going to sell at the bottom, then you're going to panic, and then you're not going to get back in, and then you're going to want to buy when it goes up, and then you're just going to lose money, right? You have to know your timeline too. If you need this money, please don't buy anything with it. If you have money, and even as an experienced investor, I feel like you fall in this trap sometimes where you're really bullish on something and you think, okay, as long as it doesn't fall 50% or something, I should be fine if I need the money next month, or I have something that I want to do with it. I'm really bullish on it. Still, don't do it. If you have to have this money anytime soon, even within the next year or so, I would be very careful about investing. Of course, not financial advice. I don't want to hear anything about how you didn't get in on something because you were risk averse or anything like that. But you need to spend money that you actually have and that you can invest, right? If you start spending money that you might need even 6 months from now, right? You might see it drop 20% and freak out and then sell it, and then it goes back up. So you have to have a level head. Third of all, you have to follow smart people. Like I said, follow smart people on social media. Follow smart people that you know in real life. Don't hang around with people that will panic sell at any single given moment. Now, fourth, I'm including a 4th one on this list that's not actually on the list. Have some money on the sidelines. Then you are actually excited when things fall, especially if you have money. Like if you have $10,000 sitting around and your portfolio is $100,000 or even $200,000 and you see Cardano fall down $1, right? Or you see some stock that you like fall down 30% in a day. I like picking up when there are sharp drops. There's almost always some type of recovery. Of course, not financial advice, but when you see longer drops over time, that's where it's a little bit more debilitating. It's really difficult to want to buy. But when you see something fall so quickly, like the crypto crash, right? There was no huge, terrible news, right? There was some fear, and we had been beaten down for maybe a couple weeks on Bitcoin and stuff. But it was really that stop losses were hit and people were being margin called, right? If you see something fall 30% in half an hour with no news, you know there's something else going on. So have some money on the sidelines. I was able to buy ADA, Cardano, at about $1.05. And I've been buying it at $1.70 before that, and I was happy to because I think it's got a good long-term outlook. Have some money on the sidelines. Now, if you're interested in crypto or if you're investing in crypto, I would suggest keeping some money in a high-interest account, right? So with BlockFi and with Voyager, both of them, they pay you 9 to 10% on some of your stable coins. So it doesn't fluctuate in price. Throw in a little bit of your portfolio just in stablecoin, because that way it pays you 9%. It matches pretty much any other index fund on a long-term outlook that you could have. And then you can buy the dips, right? You're not losing out. You're not losing purchasing power. But that way you have some money as firepower. And even if you don't put it to work, your mental state will be so different when you have money on the sidelines as opposed to when you just see stocks or crypto fall day after day for a couple months and you're just sitting there knowing you can't buy anything. You kind of get torn up inside. So definitely consider that if you guys are looking at investing into some of these. I think it's really important to have some money on the sideline. People sometimes ask me how much. I think it depends on your portfolio, risk tolerance, all that kind of stuff. I try to hold, I would say, the amount of money that my largest position is. So my largest stock position is about $6,000. I try to keep at least $6,000 in cash at all times. Now, I have more than that. It's just that it's hard with the tax situation because I have to pay my own taxes quarterly to know exactly what I have at any given time. I'd say somewhere between 5 and 20% of your portfolio. If you get up to that 20%, you really have to have it in something that's appreciating. I think like that stable coin, I think it is really important because otherwise you're losing a lot of power. And it depends on the market, right? If the market's exploding, might be a good time to take a little bit off the table, maybe take some profits. And then if it's really crashing and it keeps on falling lower and lower and things are just getting so juicy, it might be time to put some money to work. Of course, do all your own research on this. I'm not a financial advisor, but you should definitely follow and pay attention to people that are really knowledgeable in the space that you are looking at. But again, just be careful out there. Thank you guys for watching. I really appreciate it. Check out those links down below to BlockFi and to Voyager. Also, check out the link down below to Webull. If you guys want to see what I'm buying and selling daily, you can check out the link down below to Patreon. There, I tell everyone what's happening right when the stock market opens and when it closes. Thank you guys, and I will see you in the next video. Bye.